Good afternoon then, folks, as we head into US trade on Wednesday, the 30th of August. Start with the headlines, but the headlines haven't really had time to catch up with this top one. You can see here US preliminary Q2 GDP plus 2.1% versus a consensus of 2.4%. Now, that's really what's moving markets at the moment. We did have some German inflation, but in terms of the kind of currency grid and the news and stuff, kind of some substantial moves then off the back of that haven't really had enough time to fully digest into markets. But you can look at the grid awfully mixed across the board. You can see stocks mixed everywhere, and you can see commodities mixed. You can see bond yields mixed globally. See the US dollar mixed on this grid at the moment. You can see the Australian dollar, Kiwi dollar, Canadian dollar mixed. Euro, a bit of upside. Sterling, a bit of upside. At the back of some data a little bit earlier on. Japanese yen, a bit of downside. But really the movement is coming from the recent European data and the US data, which we will have a look at now in a second. We'll jump across to the calendar, and what we can see across here is German inflation 6% versus, or a consensus of 6% versus an actual print of 6.1. Now, slightly higher than anticipated. German inflation data will keep the ECB on their toes. Now, couple that with a bit of positive data from the UK this morning. 0.23 billion, 230 million pounds worth of mortgage lending versus a consensus of minus £500 million in terms of mortgage lending across the UK. Some consumer credit, slightly down, a bit positive that people have less credit on the books, but mortgage approvals as well. I mean, not kind of in line with consensus, slightly below previous, but really that mortgage lending, people taking out money to increase, to spend money, shows kind of bit of underlying health in terms of people's finances in the UK, which is a bit of upside in sterling off the back of that. But the main economic data points today: US GDP and German inflation, right? German inflation, as I said, 6.1%, slightly higher than anticipated, causing some upside pressure on the euro, which is also a bit of downside pressure in the US dollar. Plus then ADP employment change. So after those job openings figures yesterday, and follow through today with some weak employment figures, couple that with some weak GDP figures, which will reaffirm bets that the Fed are not going to hike interest rates again at their next meeting. That brings us into PCE tomorrow and also into NFP on Friday, which now, if those figures come out, should be negative for the dollar, positive for stocks. Which you jump over to markets and we can see the dollar popping lower across the board. You can see Aussie, Kiwi, Euro and Sterling all pushing higher. You can see dollar Swiss, dollar CAD, dollar yen all pushing lower. And you saw the dollar weakness come in after those job openings yesterday. That has then had follow through with weak GDP, weak employment data. Again, reaffirms the stance that the Fed probably will not hike interest rates at their next meeting. A slight bit of a pop higher in stocks, nothing massive in the stocks, more to do with the dollar, as in general weak economic data it's not positive for stocks. That's why the currencies are easier to trade off the back of any of these data releases. You can see yields in the US slightly lower, 10-year yield, 2-year yield, both popping lower, which again lends some support to the weakness we've seen in the US dollar. That is dragging gold higher with it as well. On the US dollar lower, dragging gold higher, if that makes sense to you. But that's really where we're at in terms of markets today. Now, in terms of going forward, you'd have to imagine that is how markets will trade for the rest of the day. US dollar weakness. Equities don't seem to want to move too much off it, but likely to remain somewhat supported. But I wouldn't be too convinced with moves in the equity markets. But selling US dollars seems the way to play it at the moment. Into the economic calendar for tomorrow, we can see the PCE figures. If they come out negative, personal income, personal spending figures come out negative, NFP, unemployment rate, all that on Friday comes out negative. That is pretty guaranteed downside for the dollar after what we have seen over the course of the last half an hour, 45 minutes. So that's where you need to keep your eyes peeled on, or eyes focused on, should I say. We need to keep probably on the short side of the dollar, certainly for the rest of this week anyway. But the data tomorrow and the data on Friday could impact that trade idea.